Today in the EU, ECB's high-stakes balancing act amid economic turmoil. The European Central Bank, ECB, is a powerhouse in the EU, wielding influence over financial supervision, foreign exchange reserves, and economic forecasts. The ECB's main goal is to keep inflation at 2% by adjusting interest rates. Its massive quantitative easing program from 2015 to 2022 aimed to tackle low inflation with trillions of euros. With current economic stagnation and geopolitical tensions, the ECB's decisions are sparking heated debates. But how do these decisions affect everyday life and economic growth? Hello and welcome. I am Evi Kiori, and this is Today in the EU. To dive into the ECB's role and responsibilities, I'm joined by our economy reporter, Thomas Moller-Nielsen. Hi, Tom. It's good to have you here.
Hello.
Now, even though the ECB collaborates with other EU institutions, it operates as an independent entity, which makes it a very interesting case in the European landscape. Tom, you are the best person to answer this question. How does the ECB work and why should we care about it?
So the ECB is responsible for a number of different tasks. With other institutions, it's responsible for handling financial supervision across the Eurozone. It is responsible for managing the Eurozone's foreign exchange reserves. It publishes reports about bank lending. It also publishes projections, how much is Europe going to grow over the next few years, what the inflation outlook is going to be like over the next few years. But its main task is policy, and in particular, setting interest rates. It has in the past also engaged in other forms of monetary policy that is not interest rate setting. So quantitative easing, that was something that it did between 2015 and 2022. And this was basically a massive asset purchasing program. So basically pumping loads of money into the economy. And the reason for that was that the ECB was concerned that inflation was too low. The ECB has a target of 2% inflation, but the main way it reaches its 2% target is through interest rates and setting the interest rates.
And in terms of functions and responsibilities, could you give us some more examples?
Since the Eurozone crisis, which erupted after the financial crisis in America in 2008, the Eurozone economy was faring very, very badly. And in 2015, so what the European Central Bank did was to pump loads and loads of money into the economy because it was worried about the health of the financial system, but also it was worried about growth. And also it was trying to raise the inflation rate a little bit. In fact, inflation in the Eurozone even became negative in April 2016, around that time. Its key interest rate, which is something called the deposit facility rate, this was negative until the full-scale invasion of Ukraine by Russia in February 2022. And what the European Central Bank did after that was it went on the longest period of rate hikes in its history, and it brought its key interest rate from negative levels, so 0.5% to 4%.
Now, the ECB is having a meeting sometime in September. What is this meeting's purpose? What do you know about that?
Well, we don't know for certain what they're going to do. So right now, as we're speaking, most people think that the ECB is going to lower interest rates. I think right now it's currently pricing, and I think it's an 80% chance of an interest rate decrease.
Right. On the interest rates, I feel like I should already know more about this, but I don't. So how has the situation been this past years, and what are the expectations on this?
Between July 2022 and September 2023, the European Central Bank hiked rates on 10 consecutive occasions. So again, from 0.5% to 4%. Then it paused rates for several meetings. And then in June, it cut rates for the first time since September 2019. So from 4% to 3.75%.
The Governing Council today decided to lower the three key ECB interest rates by 25 basis points. Based on our updated assessment of the inflation outlook, the dynamics of underlying inflation and the strength of monetary policy transmission, it is now appropriate to moderate the degree of monetary policy restriction after 9 months of holding rates steady.
Mentioned Christine Lagarde addressing the economic consequences in Europe after Russia's invasion of Ukraine.
When it cut the rate in June, a lot of analysts thought, the July meeting is kind of open. Will the ECB cut rates or will it hold rates? In July, they subsequently held rates. Now, most people think that the European Central Bank will probably cut rates in September. Now, the reason why the European Central Bank originally raised interest rates is because after Russia's invasion, inflation really kind of spun out of control. It hit 10.6% in October 2022.
The Russian invasion of Ukraine will negatively affect the euro area economy and has significantly increased uncertainty,
said ECB's head Christine Lagarde.
The latest data that we have as we're speaking now is that inflation went down to 2.5% in June. So basically inflation has come down. It's still above the European Central Bank's 2% target, but it's significantly lower than what it was. And so this is putting pressure on the European Central Bank to cut rates. But it's that plus the general weakness of the European economy. So this is an important thing. Again, the European Central Bank's primary mandate is inflation, but the fact that the European economy is doing so poorly is also putting pressure on the European Central Bank to lower interest rates.
And you are mentioning that the European economy isn't doing well, is struggling right now. So how can the European Central Bank ensure the Eurozone stability?
Yeah, well, I mean, it's a very interesting question, actually, because there's a sense in which the European Central Bank can't do this. We've spoken about on the podcast before, and as other people have mentioned, we live in geopolitically very uncertain times. And because of this uncertainty, there's always a very good chance that inflation might fluctuate away from the 2% target. I mean, you may remember a few months ago when there was the possibility of a full-scale war breaking out between Iran and Israel, markets became quite jittery and people feared that this would lead to a resurgence in inflation because it would increase the price of oil. There is a case to be made that the European Central Bank shouldn't just focus on its 2% target. It should have a kind of wider tolerance for deviations away from 2%. There is a kind of broader issue here as well that I should probably also talk about, which is that right now the European Union is heavily focused on competitiveness. You know, we need a competitive economy. The US is outgrowing Europe. China is outgrowing Europe. We need a more competitive economy. The problem is with the European Central Bank having rates as high as they are. Again, they're not at its current record high of 4%. They're currently 3.75%, but they're still very high by historical standards. I mean, a fraction of a percentage point away from 4%. And this is dampening Europe's ability to grow. It's dampening or harming companies' abilities to take out loans, to make investments, and to make the European economy more competitive. And so this is another reason why there is some pressure, I would say, particularly from progressive groups on the European Central Bank to lower interest rates in order to kind of provide that injection into the economy and to stimulate the economy and to make the European economy start to grow again. I mean, right now, the Eurozone economy is basically stagnating, a few decimal points away from 0%. So it's doing very, very poorly. So that's another reason why there's a lot of pressure.
And on the geopolitical challenges that you mentioned, we know that Claudia Buch, ECB's top banking supervisor, said in July,
the establishment of the SSM, there have been shocks, obviously. The Russian invasion of Ukraine, the energy crisis, the inflation shock.
That there are some plans in motion to make sure that what happened after the sanctions imposed against Russia doesn't bring instability in the Eurozone. What's the plan exactly?
So right now, there's a huge amount of pressure, particularly from the United States, for European policymakers to seize the Russian assets that were frozen in the European financial system after Russia's invasion of Ukraine. There's more than 300 billion euros worth of assets that were frozen. The vast majority of this is in Europe, and the vast majority of the assets in Europe are in Belgium, held by Euroclear. The concern that Christine Lagarde has frequently mentioned is that if Europe seizes these assets outright, there's a danger that people will be less willing to invest in Europe in future because it would set a precedent whereby Europe could basically take the assets of countries who have, well, done things that are illegal or even done things that Europe simply doesn't like. In any case, it would make people less willing to invest. And I think that's a major concern. Right now, European leaders are not focusing primarily on attempting to seize these assets. Rather, there's a complicated system whereby they are using the profits from the frozen assets in order to back a loan that has been promised to Ukraine. On the issue of seizing the assets, this is something that the ECB is quite concerned about.
And you already described a little bit how the ECB is being perceived by many left-leaning parties, and its tight monetary policy is really unpopular and has faced significant scrutiny from the right as well, who argue that it has boosted inflation. From a political standpoint, what are the criticisms directed at the ECB from political parties?
Well, there's a lot. So from the right, there are, I would say, two main criticisms that they have, of the European Central Bank. So one is the asset purchasing program, quantitative easing, where basically the European Central Bank pumped trillions of euros into the economy. right-wing people and monetary hawks really didn't like that whatsoever. They were like, this is dangerous. This is going to lead to a resurgence in inflation. This also violates the European treaties. They were vehemently against that. Another criticism that they level at the European Central Bank is that after Russia's invasion in February, it took until July for the European Central Bank to start hiking rates. And so criticism is, look, why did you wait so long? Inflation was, already extremely high at the time you raised these rates. Why did you wait until July? Why didn't you do it sooner? Maybe a third criticism you could mention as well is some people on the right are also concerned at the European Central Bank's, well, they're even concerned at the fact that it cut rates in June. They say, look, inflation is still above 2%. It's still above 2%. Okay, it's gone down from 10.6%. It's at 2.5%, but it's still higher than 2%. Why are you cutting rates? Keep rates where they are, or maybe even raise them in order to get inflation down to 2%. So that's the criticism on the right.
And the left?
The left-wing criticism, I should also say it is criticized by many mainstream economists as well, but this is a very crude, distinction between the right and the left. But the left-wing criticism is they say, look, why did the European Central Bank hike rates at all, actually? What happened after Russia's invasion, it was a supply shock. It was because energy prices rose. But this was, perhaps you could argue that this was going to be a permanent thing if we, permanently decouple from Russia. But the idea is this wasn't a problem of demand necessarily. This was an inflation crisis triggered by a supply shock. Monetary policy isn't really the appropriate mechanism to address these sorts of things. Moreover, they say another major factor which explains why inflation rose was it was corporate profits. So import prices were rising, and what they did is they hiked the prices for their goods by more than they needed to in order to account for these rising import costs, basically. So in a sense, they were passing on to consumers the effects of these price rises, so to speak. And they were making a lot of money as a result of this. So one criticism people often say is, look, if corporate profits is to blame, and if it's mainly a supply shock, and if rising demand from consumers isn't really to blame, then why on earth did you hike rates? Labor groups, the European Trade Union Confederation, make a big thing about this. They say, look, what we need are windfall taxes. We need to tax these companies that have made insane amounts of money rather than hike interest rates.
How about the economists and the experts on this? How do they assess what the European Central Bank is doing?
The criticism that you often hear among professional economists, or some concerns I should mention among professional economists, I should say. I think there are two concerns, or three maybe. So one is this possibility of a wage price spiral. This is a concern about the European Central Bank cutting rates too early. So if you cut rates too early, what it'll mean is workers will start demanding higher wages because prices will increase. Governments will be forced to give workers higher wages, which will then increase demand even more, which will make prices go up even more, which will make workers demand even more wages, and so on and so forth. And you get into this escalatory wage price spiral. Another criticism is that the European Central Bank might keep rates too high for too long.
And why is this important?
So the idea is by keeping rates for too high for too long, you keep demand suppressed. Workers won't want to buy things. Because there's less demand, companies will start producing fewer things. They'll expect workers to want fewer things. And this could eventually mean that this kind of permanent, low production becomes entrenched in the European economy. Yeah. This is sometimes referred to as scarring, whereby the European economy basically ends up growing at a permanently quite low rate. One other concern I should mention as well is because there's been this huge increase in inflation over the last couple of years, workers' wages haven't really caught up with that, which means that real wages, so wages when you take into account inflation, have declined over the last couple of years. And so what this has done basically is decreased the relative price of labor to capital, basically. It's made workers cheaper rather than investments in machinery, the kinds of things that would boost productivity, basically. Yeah. So it's made companies hoard labor, so keep labor for more than they need to, and also hire workers rather than investing in machinery. And this means that productivity, the amount of stuff that workers are able to produce in a given time period is lower. And this might become entrenched if interest rates are kept high for too long.
So what is the target or the goal they want to meet?
Right now, what the European Central Bank wants to see, it sees wage growth is quite high, around about 5%, and it sees services inflation. And what the European Central Bank wants to see is it wants to see this go down, or wants to see signs of this going down before it cuts rates. What the European Central Bank does is very, very important. It affects people's lives, pretty directly. It affects the price of loans. It can affect the deposit rates, the amount of money that you get when you leave your money in your bank. So it's important for that reason. It also feeds into issues of European competitiveness as well. If the European Central Bank is going to keep rates at a high level for a long time, this could, at least in the short to medium term, really affect Europe's competitiveness relative to the United States and China as well. There are all these arguments on all these different sides, from the left, from the right, from the center, about the European Central Bank's actions. But it is something I think that regular people should care about more. And it's a debate that I think should be having a lot more in the public sphere. I think regular citizens should be much more concerned
about what the ECB is doing.
Yeah, about what the ECB is doing. It's a very important debate in many, many ways, and it affects their lives directly. So I think people should care.
Tom, thank you so much. I am Evi Chiori, and this was Today in the EU podcast. Visit Euractiv to stay on top of the latest news. If you haven't subscribed yet, you can find us on all streaming platforms. You can get in touch with us by leaving a comment or a review on Spotify and Apple Podcasts. Your reviews help us a lot to spread the word about our work, but also understand what topics you like listening to. This episode was produced by Miriam Sáenz de Tejada, Nicoleta Yonta, and me. Thank you for tuning in, and until tomorrow morning. As part of our commitment to accuracy, inclusion, and transparency, Euractiv is part of the Trust Project.